Welcome to this explainer. Today, we're breaking down the highly anticipated KINGFINITY Insights weekend brief for August 8th, 2026. And look, this week, we aren't just looking at minor market fluctuations. We are uncovering a massive, underlying structural shift in the crypto ecosystem. It's literally redefining how value and trust move globally. So today, we're exploring why the era of the Wild West is finally closing and what exactly is rising up to take its place.
Listen to this thesis right from the brief. This week did not belong to a token. It belonged to the operator. That single sentence pretty much encapsulates everything we're going to unpack today. For years, the whole narrative has been dominated by which token is pumping next, or what new decentralized smart contract is going viral. But we're moving way beyond daily price action now to explore the market's true trajectory. And that's this paradigm shift from decentralized token chaos to structured operator-controlled systems.
All right, part 1, market volatility and meme shifts.
Let's start by looking at all the noise on the front end of the market. The stuff that usually grabs all the retail attention. For a lot of casual observers, crypto still looks like this wild, high-risk game driven entirely by meme coins and rotating liquidity. It's essentially the illusion of a decentralized casino, right? Where money just moves rapidly from one internet joke to the next based entirely on hype rather than any real fundamentals. It's loud, it's super distracting, and frankly, it really masks the actual evolution that's happening in the background.
But as you'd expect, that casino environment has some pretty brutal consequences. Chaotic access comes with a massive reality check the second leverage gets aggressively wiped out. When the market turns, it doesn't care about your favorite narrative, it only cares about liquidity. Unregulated, highly leveraged speculation always, eventually, faces a reckoning. It clears out that leverage and leaves retail traders completely exposed.
Which brings us to Section 2, Security and Self-Custody Threats.
Get this. Over $30 million was stolen in 2026 alone just through physical threats. We all love to talk about the freedom of being your own bank, but as access expands, self-custody vulnerabilities are heavily stressing the system. And this isn't just about someone hacking a smart contract from their basement halfway across the world anymore. We are seeing massive physical threats targeting individuals based purely on their public identities and wallet addresses. Being your own bank now means you literally have to take on the physical security requirements of a bank vault, which is a harsh reality a lot of people are completely unprepared for.
And the digital threats? They're evolving even faster. According to the Insights brief, we're seeing incredibly sophisticated AI-assisted security campaigns, which were just recently followed by a critical, actively exploited flaw in the BTC Pay server. So if you're trying to navigate this decentralized landscape totally on your own, you're caught between volatile market leverage, very real physical threats, and AI-driven exploits. For the average user, the friction of all this decentralized chaos is definitely hitting an absolute boiling point.
Let's pivot to Section 3, the institutional capital return.
While retail's getting caught up in all that chaos, the sheer scale of the institutional shift happening right under our noses is just staggering. $1.1 billion in verified ETF inflows. Let that number sink in for a second. This represents the strongest week since April. So while retail was out there getting wiped out chasing meme liquidity, verifiable, regulated institutional capital was pouring into the space at a billion-dollar-a-week pace.
These institutional flows are returning to core assets like Bitcoin and Ethereum with absolute force. It's completely shifting the tone of the market away from high-risk speculation right toward institutional trust. They aren't messing around in the decentralized casino at all. They are utilizing US-regulated institutional access points because big money, well, it demands structure, it demands predictability, and it demands verified rails.
And they aren't just buying up ETFs either. They're actually migrating the very infrastructure of traditional finance itself. We are witnessing a foundational transformation. Things like banking vaults, tokenized bank deposits in USD and GBP, and traditional finance rails are moving directly on-chain to establish a 24/7 settlement infrastructure. The whole system is literally being upgraded from the inside out.
So that leads us perfectly into Section 4, the era of the operator.
When you pull together all the specific events from this weekend's brief, an overwhelming body of evidence emerges. Operated systems are taking over the space. Circle is officially moving from just being a stablecoin issuer to a full-blown settlement network operator with its Arc mainnet launching September 16th. And their founding validators? We're talking BlackRock, Visa, MasterCard, and the DTCC. Meanwhile, Coinbase is evolving into an everything exchange, rolling out nearly 4,000 US stocks just for their UK users. Governments are stepping in too, like Brazil ensuring outbound transfers face real regulatory checkpoints.
Even down at the protocol level, XRP ledger developers are pushing for selective privacy. Guys, this is not a decentralized free-for-all anymore. These are highly engineered, strictly operated ecosystems. We are officially making the jump from decentralized chaos right into operator control. It's no longer just about who holds a token or, the theoretical purity of a network. It's about the operators, the real-world entities who actually select the validators, patch the software vulnerabilities, control the disclosures, and approve transfers based on strict regulatory frameworks. In this new era, the operator's ledger and their compliance structures matter just as much as your own wallet.
Ultimately, the true underlying story of the market right now is durability. You can have all the fancy stablecoin rails, the selective privacy, and the everything exchanges in the world, but if the operator running it is flawed, the whole infrastructure crumbles. The quality of these operators is now dictating the entire future of digital assets. The operator is the market.
So as we leave behind that illusion of the decentralized casino and step into an era governed by institutional validators, sophisticated security protocols, and regulated checkpoints, we're left with one really critical question. Access to digital assets is expanding faster than ever before, but who is actually operating your infrastructure? Think about that. Thank you so much for joining me for this explainer. Keep questioning the systems you use, and we will see you next time.